Hi, good afternoon, everyone, and thank you for joining us today. This is Shrishti here from Binary Semantics, and today we are having a session on Union Budget 26-27. I'm sure you guys would have a lot to say on it, which we will be taking up today for sure. All your points that you would want to share with the experts here in the session. But before that, let's put a little bit of light on the union budget overall, like what we are looking for looking at this time. The Honorable Finance Minister Nirmala Sitharaman, she came up with a very good proposal this time in our union budget, wherein the importance to recognize that the budget itself shouldn't be a 1 year or a 2 year vision. What our authorities are trying to build here is an economic story so that the India can move forward in a more focused way on the parameters like building capacity, strengthening systems, and creating sustainable growth, and that too to be done in a not for like short term wins but rather for long term wins, right? So this time's budget actually came up with the vision of going ahead and making changes that would be sustainable for even 20 years from now, and that was a very good move from our government. We are operating right now in a kind of economy where all the global trades, we see that they're fragmented, the supply chains, they have been rethought, and that's what our union budget also focused on. What we're looking for is a growth story that is structural in nature, and that was very much brought out in the budget talks also. What interesting is also the fact that what did not happen. I'm sure a lot of you would be like, where before the budget was about to come out, you would be coming with the thought that maybe there would be some tax changes, or there would be some announcements that were important for the overall functioning of the businesses, which is very important. Your point taken here. But what the government is looking for is basically simplifying the tax structure overall. They want to reduce the disputes that are happening, that also involves your litigation, which was also a very good focus point. Also, what the government is looking for is strengthening the institutions and making it easier for businesses to plan with certainty. Now, keeping that in alignment, one side, the tax policy that it cleaned up to reduce friction and ambiguity was a very good move from the government. Also, the budget, it laid down this time a very structural reform in the form of making changes for industries, wherein the growth engines targeting the manufacturing, infrastructure, services, and technology, which is also a very key aspect of our India's growth, the IT, that was mentioned this time, and the reforms have come up for that. What they want to mainly focus on is the audit readiness and the regulatory changes. That would be very interesting for you as a tax professional, right? But basically, what the government is trying to promote this time is the readiness and the preparedness that we have in our systems overall, like how much of our systems are ready to go global and go digital, right? To give you a comprehensive outlay of the budget overall this time, we have our experts here with us, CA Sarthak, Jain, and CA Kanika, who would be discussing in detail what budget brought for us for indirect taxes, direct taxes, in terms of the industry specific sectors that we the changes that were brought in. So without further ado, I would like to hand over the floor to them. Thank you.
So, hi everyone. A very good afternoon to all of you, and a warm welcome to the budget session this time. As Srishti rightly said, that this time the union budget was not focusing just on any individual person or segment or sector, but this time budget has focused over the cross sector functionalities. Like it has even touched upon the individual segments, the small business owners, the large enterprises, the region-wise improvements that should take place for the overall development and boost the economic and sustainable development for the India as a economy as a whole. As now, as you have seen in the past few years, that India is positioning at a very strong place. Either it is leading to the US deal, this Europe deal, any other deals you talk about, that India is having a very strong hold over all the dimensions, and it will not, I think, take longer because governments are investing, keeping in mind the infrastructures, the requirements like the MSME projects, the AI touch upons, the power grids network, and being the hub of the technology hub few decades back. India promoted in that way and encouraged a lot of employments. This time, the it would be done through the AI development. So I just giving you a walkthrough of the budget this time, that what our finance minister, Honorable Srimati Nirmala Sitharaman, talk about. So this time she has more focused this budget towards the Yuva Shakti driven budget, and I'm totally agree to this fact because what all drifts she has taken over in the forms of kartavyas and the pillars that she is talking about, they actually contemplate with the progress, the approach which India needs to take for the upcoming future, like accelerate and sustain economic growth, full aspirations of people, and vision of sabka saath and sabka vikas. This, I think, I could cover up in a bundle of many things of the proposals and the investment, segments wise distribution of the budget this time has been a lot. Like up to 5,000 crores has been dedicated towards the tourism industry, that is uplifting the northeastern sectors. The rich minerals are needed to be, work upon, that are actually an asset to the India, and we can have a great takeover in the foreign markets with this by uplifting the Tamil Nadu, the Orissa region, and the other regions. Thirdly, the combined MSME championship. We are going to invest 10,000 crores in this segment, and this will be an uplifting not only the large MSME but the small ones as well. So I think this is an integrated approach that which India is taking towards. And as far as I've mentioned, that as you can see, all the estimates that are being run here, that what all capital expenditures, the overall expenditures, the reduction in the fiscal deficits has lead on to, a very enduring future of India. So here on, we could speak of the state of the Indian economy. As you could see, that like all the factors have been discussed here, but I'll just give you, just highlight few pointers at how we are accommodating, though it will not benefit that much individually, but overall, development of the country in terms of the industry and the regions and the proper segments, this could definitely lead to a very static and a very, growth oriented economy. So first of all, India is continues to lead global growth GDP. That is 7.45%. The domestic consumption, remains strong. As you can see, there is a lot of expenditure being done on this consumption part. So that, and this is about 7%. Still, we have a very low inflation rate. And the structural reforms in terms of how the automation is being done for GST, day by day, improvisations are being done here. And the public capital expenditures, we have turned around four times by financial year 2025. So I think this has been a remarkable growth this time. And the external positions, if you talk about like the country current account deficit, this has been fallen to 1.3%, and this is one of the lowest in the larger economies, and the growth upliftment of the Indian economy as so far. So this is all the overall budget that we have spoken to. But here, moreover, the budget speaks about policy stability and the procedural enhancements, rationalizations, and the ease of the working and the compliances that has been introduced by the government this time. Now, moving on to the indirect tax part that would be taken over by me. Here, the indirect tax reforms, though there are not much reforms this time, I agree to that fact. But whatever reforms has been made, this I think being in a consistent push by the government to the direction like we are focusing more over the leveraging the technology, building a strong GST frameworks, and we are resolving the day-to-day interpretational disputes that has led to ongoing litigations and being an harassment to the public audiences and the taxpayers. And also, we are in the mode of facilitation of the trade and the manufacturing competitiveness. This is all the introduction that has been made, not only to reforms of the ease of the doing businesses, giving flexibility in the maintaining the cash flows, ease of maintaining workflow capital management, or you can say improvisation in the supply chains. So overall, indirect tax speaks about this. So moving on with this, I'll just take on to you the very welcoming amendment that has taken in this budget this time. This was already been recommended by the 56 GST Council Commissions, like the intermediary services. This has been a very controversial issues where taxpayers were claiming this as an export services, but the taxation authorities deemed to it as a taxable services, due to which parameters they could not align in the the definition of export of services, due to which they are not able to get the benefits of the ITC refunds, and there are a lot of accumulation of ITC happened to taken over this till the time the disputes has been resolved. So this time government has taken a very important move, and prospectively this has eliminated the section 13 subsection 8, that is on the intermediary services, where earlier the location it was used to govern that location of supplier would be the destination of that product or the service, but now it has been moved towards the location of the service recipient, so it could be taken as a export of services. And with this, a lot of ITC blockages and all the prospective controversies that could have arisen in the upcoming future, this has been eliminated. But still, I just want to put my glimpse over it. Like, this has been a prospective amendment, right? So this will definitely going to get a pause over any future controversies or any litigations that could happen. But still, whatever the pending and the outgoing, ongoing cases are being still pending, but still we are expecting from the government that we could get some clarification and guidance over it. So, with that, we can move on to the next amendment. The another important amendment, you could say, and being a kind of a strong move by the government, like it is a kind of more restrictions towards the manufacturers and the dealers who were making a use of the commercial credit notes. The clarifications has already been given in the past. So here, what is happening that as you have, I think you must have an idea about how the valuation as per section 15 is being done. So accordingly, when you get the adjustments of the accounts, there are few conditions that you have to get met, that for which you can avail the discount and you do not need to reverse the ITCs, right? You can reverse the ITCs accordingly and save the taxes. So here the two important conditions, firstly there were three, like there should be some prior agreement at the time you are making the sales or something, and secondly, whenever discounts are being given to the recipients by the suppliers, it should be linked to that original invoice, to that original sale that you're making. Thirdly, ITC reversals should be done. So government was having, the taxpayers were actually having very problems in this, the first leg of ITC reversals, because earlier certification need to be provided, but this was a very cumbersome job for the taxpayers as well to every time get the certifications and to get the proof, because the normal day to day how the organizations run, they usually do not get into that so much agreement, written things, until unless there are such deals that are very involves a huge amount involves. So this was a problem. So this agreement thing and this linkage thing is also being now being proposed to be removed in this budget, and definitely now you can easily avail use the discounts, and you can also issue the credit notes, not the financial credit notes basically, but the credit notes. Similarly, it will going to reflect in your IMS as everything is being automated this time, and the recipient could accept or reject that credit note accordingly. So this has been a very important move. But here, one thing needed to be understand and focused by the manufacturer or dealers, that earlier, that as you all know, that you can only issue the credit note up to 30th of November of the following financial year. So this adherence needed to be strictly followed now. You can now cannot in any case issue commercial credit notes as it was happening in the manufacturing and dealer things. Though it was used to pass on the reversals of the supplies or just to attract more sales, they could not do and has to adhere this thing. So this way, I think strictness has been imposed by the government, that that credit notes should be there, and accordingly it should move through the IMS, and accordingly this reversals things could be met here. So this was the overall amendment, but yes, it is really important. And as no stress of the agreements and the linking of the original documents, things have been made easy for the treatment of discounts here and the reversals as well. Now, the third important movement, or the this has been really an important, very welcome amendment, because as you all know that we could take 90% provisional refunds, like for the zero rated supplies only. But now this has been extended to the inverted duty rate structures as well. Inverted duty rate structures, just to reiterate upon it, is the one that if the output supply is supposedly at a lower rate, say 5%, and you are purchasing the raw materials for a higher rate, say 12%. So there always be a blocked ITC. The ITC would be accumulated. Your working capital is accumulated, and actually this is a kind of a constraint and a restrictions towards the manufacturers, and that impose a lot of difficulties for the day-to-day operations of their working. So by this, now you can easily claim the ITC. There would be no accumulation. And also, the another important move, as I've rightly said in the beginning, this time the focus is not only on the large groups, but also the small strata of business owners. Here, there is the threshold of the, earlier of 1,000 tax brackets has been removed. And now, likewise, even the small exporters are promoted, and if they are exporting anything or sending anything across India, they can easily take the refunds. So this has been a very important moves. Those smaller, you are looking at a smaller front, but actually there will be a lot of relief to act the manufacturers who have this problem of getting stuck with this ITC accumulation, and there's no other way out that they can claim it. So I think moving on to the next important amendment is appellate mechanism for advance rulings. As you already know that NA has to be established for the cases of adverse rulings of the advance rulings. This is the higher appellate tribunal basically. So what government has done, first I'll give you an understanding that why it has been given. As you all know, advance rulings are taken particularly for that company, and restricted towards all those judgment that has been passed in that advance ruling is being taken for that particular company only. So, but here what is done? Supposedly, if they are large jargons, they definitely, if they have multiple registrations over the all over the country, GST registrations. So what they're going to do? Similarly, they have taken an advance ruling in one GST that would be pertaining. They're going to take it in another state as well. But here the conflict was that in one state the ruling was passed in favor, and the another state it was an unfavorable ruling. So this was the gap for which there is no such mechanism where you can take this oppose these appeals or the judgments that has been passed in these advanced rulings. But now an interim appellate mechanisms has been developed, and now you can definitely take these benefits, and this is operative from the 1st April 2026 on. Now the another changes that has been made is in the customs ones, and they are very though they are small, even are Honorable Finance Minister has spoken about it, and two, three very important changes. Keeping in mind this blockage things has been taken care of here also. In this custom duty deferment things has been done for the AEOs of tier 2 and tier 3. Reason why because here the blockages were there, and the payment cycle from 15 days has been moved towards 30 days. So definitely compliances pressure would be lowered and minimized with this thing, and also their blockage of working capital and the cash flows constraints could also be met here. So this has been a very strategic move and a big relief to the importers here, and the AEOs. And also for the advanced rulings, validity has been extended from 3 to 5 years. So this has also been a very important move. This is the procedural requirement, but yes, it is also a very welcome move. The another important thing is the penalty one. Like this penalty has been replicated in the terms of the non-payment of duty for any non-payment as charges. So now it is more particularly as a fee, not or a charge, but not in the penalty form. All right. And another important factor for all the importers, this could be relief, like for the inter-warehouse movements that as used to be done earlier, a prior permission from the proper officers needed to be taken, right? So now this has also been eliminated. They can usually transfer from one warehouse to another, and there no such prior permissions are required in this case. Another customs changes that we are talking about. This was the, I think, overall changes, and another few changes are also, but these are, I think, the major ones that could actually impact the flow of an importer or an exporter here. With this, we're going to take up you towards the sectoral changes, how this has implicated, how indirect taxes has implicated sector wise, because this was a dynamic budget, fiscal oriented budget, not only to one strata but to overall. So in the automobile sector, for the PLI schemes, this custom things, the sunset clause has been, extended till 31st March 2028. All the exemptions would be for this EV, for for promotion of this Make in India and the Atmanirbhar Bharat, keeping in mind that we are promoting the MSMEs. Similarly, the automobile sector and the other sectors are being given still a boom so that they can extend this thing towards these exemptions to a later period. The next sector I would also talk about the textile sectors, tourism sector. Like the textile sector basically is also given a boom this time because country is focusing on the major technological developments in the textile industry, and also it is more focused on the boosting the employments in the segments, either textile or tourism. And with a wider approach, they are looking it into as a strengthening the position of India in the global textile markets. So this has been a very major move. As you can see in the textile industry, it has launched various schemes like National Fiber Scheme, the Summer 2.0. They are upskilling the labor, the workforce, either in the tourism with the 10,000 guides upskillment, or in this textile industry. Promotion towards the khadi is also being given, and national and various programs like National Handloom and the Handicraft programs will also be launched. So it's an overall expansion of the textile. So for the tourism, they have dedicated, basically 5,000 crores for heritage and the temple developments, and they have more focused on the northeastern sectors, even the Buddhist circuit, because a lot of foreign tourists used to come here, and they could not, as the infrastructure were not appropriate that much that could make their longer stays, or we can earn more revenue on that part. This would not only uplift the tourism industry, but also a lot of employment would be generated in all these sectors, through these sectors. With this, also many other sectors are being taken care of, like healthcare, pharmaceuticals, electronics and semiconductors, chemical, banking sectors. So all these have been given a lot of scope for improvisations, and they can take a lot of benefits with the investment propositions by the government this time. The another segment I would touch upon is the SEZs basically. The SEZs in this, what government is actually seeing, that there was a huge tariff that was on the personal imports also, that has been reduced from 20 to 10. And another welcome move that has been done, that at the concessional rates, whatever SEZs are exporting towards the DTA, like the domestic tariff areas in the parts of the India, it will also be prescribed at a concessional rate. So this is also very important moves. Similarly, the certain exemptions will be continued for the power plants. As you know, this is actually required with this AI technology. A lot of nuclear energy or another power grids are required, as also been mentioned by the honorable finance minister, because development of AI will not only need just development of automation things, but also infrastructure, strong infrastructures for maintaining those data centers. Huge power grids are also required. So it does double the I think consumption it will be. And also there has been some withdrawal of the custom duty exemptions that would going to expire on this 31st March 2026 for the castor oil cake and the castor D oil cake. Similarly, some imports have been duty free, like shoe uppers, biogas, microwave, cancer and the critical care drugs, most importantly, critical mineral processing, raw materials that are being used in the capital goods, nuclear plants, and the nuclear project imports till 2035. As government is having a wider vision till 2047, that we a strong establishment of the centers, because making use of the AI in this time is I think that would be another great hub and great opportunities for India, and still leading to that. So I think now with that, I will look upon Sarthak, that he will going to take us and a walkthrough of the direct tax reforms that has been introduced in the budget 2026.
Yeah, hi everyone. So thank you, Kanika, for giving great insights on the indirect tax reforms in this budget 2026. Now I would be highlighting what all changes have been done in the on the direct tax front. So basically, as as we all know, the major concern for all of the budgets that are presented every year is the concern about the middle class. Now, last year we got a exemption up to 12 lakhs, but in this budget there was no change in the personal taxation as of now. But they have provided some ITR filing extensions. So, you know, I think individuals, tax filers will have more time to file their revised returns. So original returns, there have been no change in the ITR 1 and ITR 2. But if we talk about the non-audit cases for ITR 3, wherein, individuals file their income based on like deriving out of the business, and then or the income that have been derived from 44 AD, which is like the most filers opt for. So the non-audit cases for the ITR 3 and ITR 4, the original due date has been extended to 31st August. These dates will be effective from 1st of April 2026. Now, for the audit cases, it remains unchanged. That would be 31st October. So the ITR 3 and ITR 4, if it is lying for the audit requirements, that has to be filed by 31st October, as like every year. Now, one of the major like the change that the government has done is the revised return deadline. So till now, the due date to file the revised return was 31st December of every year. People could not file their revised return or the belated return after 31st December, but now it has been extended to 31st of March. So you have more 3 months more to file your revised return if any error has been found in your returns, or if you have missed out the due date, then you have more time or more window to file your original returns as well. Now, if you are filing your revised returns, which have been extended to 31st March, so government has revised their late fees as well. So if your total income, like the taxable income is up to 5 lakhs, so the late fee would be 1,000. Or if it is exceeding the 5 lakhs, then it would be 5,000. And see, all of the changes will be effective from 1st of April 2026. Now, the pre-deposit for filing appeal, like if you have any concern for the intimation that has been raised by the department and you want to go for the appeal to the AT or ITAT, so the pre-deposit requirements, which was 20% earlier, has been now reduced to 10% now. So people can now file their appeal with much requirement for the pre-deposit. So they'll have more, window to do that. Now, talking about the TCS and TDS rate changes. So first, let me just give you the insights as to what are the changes that have been done by the government for the TCS rates. So there are some specified goods which have been described by the government earlier, on which TCS has to be deducted. So if you are dealing with the alcoholic liquor or the tendu leaves or the scrap, so government has now focused on making the uniform rate for all of the TCS requirements. So the proposed rate would be 2% for all of the specified goods. Earlier it was 1% for the tendu leaf, scrap and alcoholic, but it has now been kept uniform to 2% for the education and the medical remittances, which has to be done to the foreign countries, and if it is above the 10 lakhs. So earlier it was 5% of TCS that has to be deducted by the individuals, but the proposed rate now it has been reduced to 2%. So there is major improvement in it, because most of the students studying in the foreign countries, they can have more cash in hand now. Now, if you are having the overseas tour package with you, so the if it is above the 10 lakhs, earlier it was 20% rate, or below 10 lakhs, it was 5% of the rate. But government has now uniformed it to 2% for all of the tour packages, eliminating the value proportion of it. Next, for the TDS rate changes. So there has been no rate changes for the TDS part as of now. But yes, there was some clarity provided by the government for the manpower services. So earlier, what happened is, in the market there was confusion. Like, let's suppose some entity is providing the manpower services. So the receiver was confused as to which section should be applied to it. Either it should be 194C or it should be 194J, like the payment of contractors or the payment for professional services. For the manpower services I'm talking about. Now it has been clarified by the government that the supply of manpower services should be covered under 194C, and like people can deduct the TDS accordingly as per the sections 194C, like the 1% for individuals or HUF, and 2% for other cases like the company, LLPs and all. So this confusion has been clarified by the government now. Now, if I talk about the simplification that has been provided in the TDS, so let's suppose there are some NRIs and they are selling their immovable property to the residents in India. So earlier, what happened is a resident has had to obtain the TAN number, for making the TDS payments while paying to the NRIs. So they have to deposit certain amount of TDS to the government. So they had to obtain the TAN number for deducting the TDS of NRIs and then deposit it to the government. But now, effective from 1st of October 2026, they have eliminated the need to requirement of TAN number. They can easily code the PAN number, and then they can deduct the TDS of the NRIs in case of purchasing of immovable property. So basically, they are trying to simplifying the TDS implications for the individual buyers, and then the requirement to obtain TAN has been eliminated, and it will simplify the process of transfer of immovable properties between residents and non-resident. If I talk about the foreign asset disclosure scheme, so from like past years we are seeing that government is trying every ways to to get the income declared of the people which are present in the foreign, be it the asset, be it the income that has been derived from their assets, or the for or for from the other cases. So if I talk about, there are certain income or the assets, and the aggregate value of that income and the asset that are lying in the foreign is less than 1 CR. So government has proposed the tax rate of 30%, 30% on the income part, 30% on the asset value, and the aggregate of both will have to be paid as a tax to the government. Now, if any asset has not been disclosed but income has been taxed, that also covered under the 30% tax bracket. Now, if I talk about the tax holidays that has been provided to the OBUs, like the offshore banking units and the international financial services center. So the government has extended the tax holiday years for those units. So if I talk about the offshore banking units, so tax holiday has been extended to 20 years. Earlier it was 10 years. And if I talk about the IFSC units, so tax holiday has been provided and extended to 20 years out of 25, which was earlier 10 years out of 15 years. So these years should be like these years as consecutive years. So it gives a great boost to to these units to handle their income and report their profits accordingly. Now, some holidays has also been provided to the non-residents and foreign companies. So let's suppose there are any company which is present in the foreign and they are using their data centers in India and providing those services to the people. Then income exemption is has been provided up to 2047, like 31st March 2047. So any of the foreign companies that are using Indian data centers will not be taxed in India up to 31st March 2047. So it will attract the FD foreign direct investments from those companies lying in the foreign, and they will also encourage them to use the Indian data centers. So it will basically improve the employment and the income of such companies as well as the people of India. Now, if I talk about the non-resident experts, so like any individual providing professional services is providing his professional services in India and has been notified by the government. So the government has provided the exemption to such an expert for 5 consecutive years. So any for that he has to be notified by the government schemes only. Any other individual other than that will not be provided the tax exemption. So he'll have to be notified by the government, and then only the exemption of 5 years will be provided to it for the professional services that is provided to the people of India. Now, the MAT exemption has been provided to the non-residents. Earlier, it was like the non-resident has to pay the tax under the presumptive taxation, but MAT exemption has to be provided for those entities. Now, one of the major changes that has been done in this budget, which also shook the share markets on the Sunday, like the budget day, was increase in SCT rates. So as of now, in the current stat, if I talk about, 91% of the F&O traders, lose their money in the share markets. So government was worried about such, traders because they did not have such disposable income to trade in the market, but they were doing so. Due to this, they were not able to, meet the basic requirements of their life. So government used to want to discourage the F&O traders and their trading capacity so that they have much disposable income with them and they do not trade with the larger amount of money and do not lose in that. So if I talk about the futures, so earlier it was 0.02% of STD rate, but now it has been increased to 0.05. For the options, it was earlier 0.1 and it has been increased to 0.15%. And if you exercise the options, earlier it was 0.125% or you can say 0.13%, but now it has been increased to 0.15%. So this is the major change that the government has done. So, to basically discourage the F&O trading by the retailers. Now, in a nutshell, they also propose certain changes for buyback of shares. So earlier, what if the promoter or the shareholder was buybacking the shares? So it was earlier taxed under the dividend income, but now it will be taxed as a part of LTCG or STCG, and the normal provisions of both the taxation will be applied. And if I talk about sovereign gold bonds, so the taxation of these bonds has been tightened. So basically, if you are individual subscriber and if you have, like subscribed to the SGB up to the inception and you are holding it up to the maturity, then only tax exemption will be provided to you. If you are not holding it to the maturity, then it will be taxed accordingly. So these are certain changes I would like to refer, which have been proposed in the direct taxation. And like people were expecting that some rebate under Section 87A will be provided, but it has not been provided. But yes, some TCS rate changes have been done, STT changes have been done. But like if I talk about the personal taxation for the middle class, there has been no change in that. So LTCG, STCG rate remains unchanged. Tax slab remains unchanged. So everything is as is what the last year was saying. So this is the reforms that have been proposed in this budget 2026. and the indirect taxation and direct taxation both have been covered by us. Now, if I just give you the overview of our what binary semantics is leading in the global tax technology. So, like we have multiple products with us, like be it e-invoicing, we are available in Malaysia, India, Saudi Arabia. We have our e-invoicing platform in each of the countries, and then we have multiple clients over there. So we provide the e-invoicing solution, and we are the licensed with the government as well. Then we have the LMS tool with us. Basically, what LMS does is we give you your TDS, your GST, your income tax notices in one platform, and you have the ability to file the replies from our platform only. So we have such software as well, enabling CAs or enabling tax professionals to file the replies to the notices, get the real time notices on time, and know what the due date of the notices are, and they do not miss out the due date and do not face any penalties thereafter. Then we have the TDS filing software with us. So basically, we have the TDS filing capabilities. You can file your 24Q, 26Q returns with us, 27EQ returns. And then we have one major breakthrough, that is the TDS reconciliation. So now we can reconcile your books of accounts with your 26As. So like people used to, receive the notices that they have claimed the TDS which was not uh, like available to them. So we can directly match your 26 years, like the TDS present in your 26 years, and that will be matched with your books of accounts to detect any errors, to detect any shortcomings, or maybe any TDS which is not eligible for you, but you have claimed it by mistake, against which you can face the penalties. We can just flag that error for you. Then one of the major software that we have is a GST compliance solution. We offer whole features in one hub. Basically, you can file your GST returns from our software, be it GSTR 1, 1A, 3B, then 6, GSTR 6, GSTR 7, GSTR 8. So you can file n number, like whatever the GST returns are available, you can file it directly from our software on an automation mode. Then the pain point in the area currently is the IMS and the 2B reconciliation, like people facing the input credit loss currently in the market. So we have a reconciliation module with us, which is the IMS reconciliation and 2B reconciliation. We have advanced features in it, which, basically is targeted to minimize your working capital loss, which is faced by the input credit, which is not available to you, might be eligible, ineligible. We have classification methods. And then whatever action or whatever the reco that you have performed, we directly prepare your GSTR 3B accordingly, like the table 4 of GSTR 3B. So this is the USP you can say we have with us. Then we have the e-waybill solution with us. And the newly launched solution that we have is our AP automation. So basically, we can automate your payables part, right from receiving the invoices from your suppliers to making the payment to your suppliers. We are there for you, and then we can directly automate the validations part. We can give you the errors that your suppliers have made, might be in quoting his invoices on the GSTR one part. Then we can flag the errors if there are any mismatches between the invoices, POs, and GRNs. So we have five-way matching module with us. We match your invoices with your PO, GRN, IMS, e-invoicing, and e-waybill. So you have a complete reconciliation for your payables part as well. And then we flag any errors or mistakes may be done by your side or from your supplier side. We can directly give you the error reports and flag your errors with you. And if all the errors are resolved, then only you can go for the parking and posting your invoices to your ERP. So we can directly sync your ERP with us. So like we have these solutions under one umbrella only. So these are some our prestigious clients with us, and many more to come.
Thank you, Sarthak and Kanika, today for this insightful session. So with this, we come to the end of the session today, and I would like to close this session quickly for you guys. First of all, let's first understand that what did the union budget for this year teach us? Uh, Honestly, we believe that the direction this time is not about the constant intervention into the corrections that keep on happening every year, which are very important. Those would obviously be taken up. But what the government is looking for this time is a long-term stability, the predictability, and the system-driven compliance and the system-driven governance. That is what the goal is, right? We can also see it reflects in the India's overall economy, that is how it's shaping up with a GDP growth of 7.5, which is considered one of the highest major economies all over the world. And the inflation has already been dipped down to 1.3 of the GDP, which really reflects the deficit of our economy. That we are heading towards the right direction. We've seen a growth over the last 4 decades, and the capital expenditures have already increased in those last 4 decades. So against this backdrop, what the budget is doing is it's making a conscious choice. We are not looking for short-term stimulus this time. The government's direction is not about those frequent changes. Also, the same reflects in the tax laws that we want to refine them. We do not want to rewrite them, which is also the right direction, because the emphasis should be on the dispute reduction. It should not be on the enforcement led expansion that we've been looking for in the last many years now, right? That is what the growth story of India tells, the growth story of our economy, that how the capacity should be built, the infrastructure and the productivity should be built, right? So coming on to the clarifications part, the fact that government is completely focusing on clarifying the gray areas. They are saying that we need to be more, we do not need to be reactive anymore. So our systems need to react to the problems that are about to come in the future, and react in the beginning itself, before that problem actually occurs. So that's what the government is trying to build, like a resilient system driven compliance, that the government and the businesses and the organizations and the tax experts like you also would be looking for, right? And also this reflects in our story, the binary semantic story also, because what we have also been working for is the same, wherein we try to build a compliance system for you, a compliance ecosystem that is continuous, that is embedded into your organization's workflows, and is auditable enough that but at the end of the year you are not stuck in that loop of the audit control that most of the times it happens, right? So we're keeping that in mind. Now I would like to close this session for all of us. Thank you so much for engaging with us today, and I really hope that our insights today helped you in some way to understand the union budget better. With that, I also would like to request that if you have any questions for us, you can always write to us at marketing@binarysemantics.com. Also, we'll be sharing with you the PDF of the presentation, and the overall session would be uploaded on the YouTube. So you can always go through it again if you feel like. So thank you for your time and engagement.